All right, and welcome back to the Halftime Report. Chipotle, if you're not paying attention, that stock is up 50% this year. And today, the Royal Bank of Canada, RBC, upgrades it to outperform, saying their surveys found that there is significant upside from menu and digital delivery opportunities. It is your call of the day. Joe, you agree with this call.
So the interesting thing is that fundamentally the company is turning itself around. There's a digital transformation. There's a phenomenal CEO. I just think it's the wrong time for a company like this. The beginning of the year was the opportunity to buy into this turnaround story, and you saw the share performance follow through above 500. It's now pulled back significantly to 435. Yes, I believe you could see a moderate bounce on a strong earnings report, but I don't know if it's sustainable in this environment. I'm not ready to offer that this is the type of name
so
you want.
So you disagree with the call?
I think fundamentally the company has turned. So again, I think it's an example, as I said at the beginning of the show. I think a lot of
stocks versus companies.
I just think the market goes to a lot of different places and ultimately ends up nowhere. And I think that could be the case here for Chipotle. I think you got more of a stock impact at the beginning of the year.
This one's easy. Take a look at that gap.
It's easy.
No, it's easy from a risk-reward standpoint. It's not an easy buy-sell call. But if you wanted to manage your risk, if you have to be in the stock, it looks okay. It doesn't look great. It looks okay. I think 390 is exactly where you want to have something in the way of risk management. I would probably use like a sell stop limit or something. But then you think about that huge gap up from the spring. Now it's been consolidating all this time. If it violates that level to the downside, it tells you that the people that were excited about the turnaround are now exiting the name, and that's a reasonable level of risk to take. At 430, say 390, it's like a $43 stock breaking below 39. So if you're a trader, you want to be in the stock, that's how you manage your risk, but you don't have to be in it, and I'm not in it.
Let me make this even easier. Restaurants don't sell like at 38 times earnings on an extended basis. This one arguably has overstayed its welcome at that lofty multiple, but eventually growth gets limited. We saw it in Starbucks. We've seen it in McDonald's.
Aren't traders, instead of looking at the fundamentals, Stephen, aren't they buying the stock?
They're buying the price.
Because they had a problem. There was all the safety issues. The stock got whacked on that.
Could have made that same argument. You could have made that same argument, though.
That argument is long in the tooth.
But the stock was 250, and you could have said it's a restaurant stock.
Less downside risk from food safety. Not no downside risk, just less.
I think the point Steve is driving at here is competition.
That's my point. You can't predict it.
Look, I think what Steve's driving at here is competition, right? I mean, stocks can trade at 37 if they have a particular growth reason ahead of them. But in a hyper-competitive business like this, where you can get so many other companies much, much cheaper, and cheapness doesn't always win the day, but so many much more cheaper, I don't see why you need to own this at 37
By the way,
times.
37 would have been a low valuation
and
for
before
Chipotle
you say you could have said that,
but you could have.
2 years ago it was the same price. 5 years ago it was almost twice this price.
Right, but so that's not. So we're talking about the stock right now. All I'm saying is they had the same competitive factors at $250 a share. It went to $500. They had the same reason to not be in an elevated multiple. And actually, they were more expensive because it was a huge earnings hole blown by the food safety issue.
It's where it was 2 years ago. And it's down from 5 years ago.
You could trade it.
Actually, it's different when it's going from 250 to 500. The store base is increasing exponentially, right? You're starting off a small store base, and you're getting much bigger growth.
No, it was 256 months ago. The store base has not grown.
I know. When he came on. When the new CEO came on. I'm just talking about in general.
By the way, the price target raised to 510 per share.